Hi, this is Jeff from Simple Forex System, and today we're going to take a look at Cynthia Macy's new product that she's just released. It's called the Simple Neon Breakout. This is what you're looking at on the screen right now, is the basic system. And for those of you that may be new to any of my videos, let me just tell you that Cynthia's products, for me, a long time ago, reached the point of just automatic buy. Okay, she's one of the few people out there that really knows trading. I mean, whether you know it or not, there's a bunch of marketers that are passing themselves off as forex traders in this market, and they just sell crap, and maybe they lifted it out of a forum somewhere, or took a free ebook they found somewhere and converted it into a product, and they're selling it for $500 or $1,000. Most of it is garbage, and most of it does not work. Cynthia's a real trader. She trades, she makes money, and she puts together these systems, and they tend to work very well. I mean, I'm not saying it's a holy grail. You're not going to use her systems and never lose a trade. I mean, that's foolish to even think that. But she puts together some great systems. They're easy to understand. They're easy to implement. They generally have very clear rules. And so, like I said, anytime she puts something out for me, it's an automatic buy. Now, having said that, let me now go and say that in the past, when I have done these videos for her, the first thing I did is I converted her charts over to Renko charts, because essentially I am a Renko chart trader, have been for almost 10 years now. And what you find with Renko charts is that you get a more honest output from your indicators. Okay, if you're using a 1-minute chart or a 5-minute chart, you can run into long periods of time where price action is such that it's a little bit high, a little bit low, back to a little bit high, back to a little bit low, and indicators will be switching back and forth. Buy signal, sell signal, buy signal, sell signal, and it just gets. It can be a little confusing, especially if you're using one of her setups where she actually relies on 2 or 3 or 4 indicators, and some of them are saying buy, some are saying sell, and it's very difficult to kind of pin it down in any one direction. Whereas with Renko charts, price only forms a new box up or down once price has moved X pips, and you can control the size of X. You can make it a 2-pip box, a 5-pip box, 10-pip box, whatever. But only when a new box is formed does the indicator then move one more segment forward. And if you go back and look at some of my videos, you'll see how that works. That I think that her systems that she puts together are great, and I think they are further enhanced if you use them on a Renko chart. Now, having said that, we're not going to do Renko today. And the reason for that is this is a little bit different system for her than what she has put out over the last 2 or 3 years. She has relied in the past on a candle charting system that's called smooth candles, and they look a lot like Renko. You can have an actual candle in a string of candles closing up. You can have 1 or 2 candles that close down, but the smoothing system basically makes it appear as if they're all closing up. And then on the flip side, you can have a bunch closing down. You can have 2 or 3 interspersed in there that closed up, and they all still appear to be closing down. And it makes for a more pleasing visual presentation. And because of that, because you're not obsessing over the opposite direction candle like you would in a standard chart setup like we're looking at right now, you tend to ride those trends out as far as the trend will carry you, and that in and of itself probably makes it worthwhile using those types of candles. Now, having said that, let me tell you that because this system is designed really more for one-day charts, daily candles, or if you want to drop down to 4-hour charts, it certainly works well there too. You don't need the kind of smoothing that you get from the smooth candles, nor do you really need Renkos. Renkos can actually be more of a hindrance, I think, than a help if you're doing daily charting, because if well, really, you only need to look at this chart right here. You can tell that you've had a couple of red candles that closed down. And from a distance standpoint, the top of the candle's at 1570 roughly. The bottom is at 1450. This is 120 pips down, but you can see there's a large wick right there. This candle moved back up from, well, the bottom of the wick is at about 140. And the top of it is at 1530. So, I mean, almost 100 pips. But there's a lot of up and down movement on the inside there. You know, it doesn't mean it was all straight one down. You can be, you know, price going to move down 40 or 50, move back up 30, down another 30 or 40, back up 20. And when you're using Rinkos, obviously you're capturing that chart action, but you're kind of you're not helping yourself at that point. You know, I mean, if you're going to be trading the daily chart, you don't want to get caught up too much on all the little intermediate movements. The only thing that matters is the open and close. If if it opened low and closed lower and you're in a sell trade, that's really all you want to see. You know, how it got there is not all that relevant as long as it got there. So the smooth candles don't really matter. And like I said, Rinko can actually kind of throw you a little bit off by the nature of the plotting of all the intermediate price action that occurs within the top and bottom of a daily candle. So really this sets this method apart really from all the other stuff that she's done recently, in that you're looking at the candles themselves and you don't have to change their appearance in any way in order to kind of smooth out the way the system works. So that's really good. Now, as far as the system itself, it's one of her all systems Argos type of systems. You're looking for everything to turn red or everything to turn green. I guess you want to call that color green before you buy or you sell. And you've got a couple of color changing color changing lines that run through here. They're slope direction lines set at some kind of unusual settings. You want them both to turn red to sell. You want them both to turn green to buy. You also have her zero lag MACD. She's included this in a couple of other things in the past. It's a solid MACD. You have your zero line on the MACD. If you're below the zero line, you're only selling. If you're above the zero line, you're only buying. So again, you have to. It's a rule that you have to be met before you basically have all systems go. And at the bottom, her GMACD is essentially just a what would you call it? Like a trend monitor, letting you know how things are going on all the different charts. So if you're looking to sell and you're on the daily chart, you want to make sure the daily chart is red for sell. If it's daily chart is in a buy trend and you're selling, you're swimming against the tide, and that's generally not where you want to be when you're trading Forex. So very, very simple to follow along with. Okay. Now let me talk about some of the things that I really like about this. The biggest problem you have when you're trading on the daily chart is you need to generally have fairly large stop losses. This is what scares most people off in trading the daily chart. They're looking at a stop loss of 75 or 100 pips, and they're thinking, oh my God, if I lose this trade, half of my account is going to disappear. Okay, well, first off, if that's what you're saying, you need to take smaller trades, all right? But maybe you're trading micro lots, but you've only got enough of kind in your account, to handle maybe a 200 or 300 pip loss before your account gets wiped out. So, I mean, obviously you want to be very protective of what you have. I understand that, and I know there's actually a lot of traders that are kind of in that position. So you tend to avoid a trading style that puts a lot of your account at risk. Okay, I understand that. With these dots, you use them essentially as sort of a trailing stop. And when I trade the daily charts, and I have been doing a lot more of that over the last probably year or so than I had in the previous 12 or 13 years that I've been trading, I am really kind of switching my attitude over to it being a daily trader as opposed to scalping. But what I have kind of developed in my own style is I generally start off with a larger stop loss, 60 to 100 pips, depending on the trade, depending on where lines of support and resistance are, and those are very important to me. I want to make sure I've got, you know, something in the way to help me out if the trade goes against me. Would like to have a couple of lines of support or resistance to maybe turn things around before I get stopped out. But I need the trade to really take off before I start moving my stop loss. Generally, I want to see the trade reach plus 100 pips before I'm going to move my stop. And that, again, is just recognizing the fact that in a situation, you can have a couple of decent candles, but you can also have one large candle going the opposite direction, wiping out all the good you've done from your big move. And if you've moved your stop too soon, you end up getting stopped out at, you know, at break even or a small loss or small gain, and then price takes off without you, and, you know, you're missing out on a 200, 300, 400 pip move. So I like having that that cushion. But here's the thing. Once the trade does take off, if you look over here in the upper left-hand corner where my mouse is at, you've got, you know, a series of candles that are moving and closing lower as you go along. You can just move the stop right behind the dots. And as long as you stay on the dots, as long as price stays under the dots, you stay in the trade. Once things start to reverse and you cross the dot, you're taken out. But rather than using like a fixed stop loss, or worse yet, on a trade like this, perhaps moving the stop loss like to break even or very close to break even on the trade, and then waiting for price to run all the way back up and take you out at break even, this follows price action just close enough that you know, when it does reverse on you, you've actually gotten out in a pretty good spot. There's not a lot of gap between the current price and where the stop loss happens to be located. You know, so I like that, actually, and I think I'm going to start incorporating that into my own trading. Now, another thing that I really like, she advises that you keep an eye on the zero lag MACD. That's the MACD in the window just underneath the candlesticks. And when price, the line breaks up through the zero line, if you're in a sell trade and the line moves up, get out. Okay, if you're in a buy trade and it moves through the zero line, get out. It moves through to the downside, obviously. You want to get out. And I've gone through a lot of these charts, and I'm going to go through a few of them here with you in a couple of minutes. But I've gone through an awful lot of these charts, and what I've noticed is that in most of these trades, when it crosses through the zero line and you are in profit, it is crossing through while you are still largely in profit, as opposed to just barely in profit. And that's important because, again, you're getting out. Maybe not with a maximum number of pips that you could have gotten, but you're getting out with a substantial number of pips, as opposed to, you know, again, riding it all the way out until the, you know, price comes back down to break even, just in the hopes that it turns around and starts heading back your direction at some point in time. So using the crossing of the zero lag MACD is a very solid exit strategy, and generally tends to work in terms of keeping you well into profit. Again, not every time, but for the most part it does, and that's really nice. If you look at the very top and bottom of the price action charts, you'll see a line here. This is sort of a Donchian style trading channel. And in this chart, actually, we actually have something you can see that I want to point out to you. And this is where I think this is one of these trades that, if I traded it my way, I would still be in this trade. If you traded according to where these dots are at, you probably got taken out. But essentially, you have everything is all systems are go on this bar right here. The price is at closed at literally 1.15000. Okay, so 115 on the euro dollar. The lowest I think you ever got here was about 114.30, 114.29, somewhere in that range. So not quite 100 pips. And I told you a moment ago, I don't like to move my stop until I see 100 pips. So my stop is still going to be somewhere up in this area. And you can see the price, in fact, reversed and came up, not to it exactly, but it got high enough, you're probably sweating a little bit, and then finally turned around and took off. In fact, somewhere down here is where I'm probably going to be moving my stop to break even. If you had followed the dot exits, there's a real good chance you're out of this trade, so it really wouldn't have mattered. But in the way that I trade it, in terms of giving a trade room to roam, price eventually came down and actually hit the Danchin down here, the little arrow is blocking it out a little bit, but that little arrow, when you see them show up, that's because price hit the line. Okay, an arrow that's on the bottom will be green, one along the top will be red. There are several of these examples you'll see here in a moment, but essentially price hit the line, and then the line, which is at 1330, about 1333 or so, bounced, and price came all the way back up to 1410, so about 80 pips bouncing on this. And it also got back over the dot, which would be the stop out. Again, I don't mind using those once price takes off. Like I said, I just wouldn't be using it right in here when price hasn't really moved anywhere yet, but I think after we got down here it would have been. So I would have had a choice. I can get out when it touches the Danchin line, or I can wait for it to take me out 80 pips in the wrong direction. Guess which way I would be choosing. If you guess getting out of the Danchin, using the Danchin as a target, you're correct. And you'll see multiple examples where price actually hit the Danchin line, top or bottom, and then reversed and went the other direction. This should be your target on every trade you take. You should be aiming for that. Now, you're not going to get it all the time. Okay, price is going to go, like this. If you have a buy trade, assuming there actually is one in here, which there's not, but if there was one, you would be looking to aim for that Danchin. And of course, price reversed and head back down, so you didn't get there. But like I said, you're not going to win every trade, but this should be your target. And if you get any kind of decent price movement, the little dots will probably get you out in some kind of a profit anyway. But this is the ultimate goal on all the trades, is to touch one of those two lines. So I like that aspect of it as well. There's a solid target, generally far enough away that, I mean, you're looking probably at a 200 or 300 pip trade if you are able to actually reach that target. Now, there's another thing that she talks about and that I really do like a lot, and that comes back to the fact that I have been using Forex Autoscaler for, well, ever since I had it created. You have the ability to use this data that is provided on this chart to scale in additional trades. So what you could be in a position of turning maybe a standard 100 or 150 pip run into 300, 400, 500 pips. I really like that. And the way that works is just simply you'll get a signal where all systems are go. You get into a trade. It gets a little bit interrupted. Here you have a little green bar on your zero lag MACD, but on this candle, everything goes right back again to red. Everything is essentially, and all systems are go. Well, you simply sell again. So, I mean, you've sold once over here, you're selling again. And you can see in this case it worked out quite well. Over the next 2 or 3 days, you've got down rather dramatically to the point where you actually were able to hit the lower end of the channel and hopefully got out, a maximum number of pips. But the idea of re-entering is solid. I think it's one of those things that too few people do, and it's in the right circumstances, obviously, you have a chance to turn a good trade into a great trade by following that. So, I mean, she gives you steps and teaches you in her training, how to do that, how to spot the re-entry points and when to get in. Really, what this is just it's just a good solid daily trader. And I know a lot of people have contacted me over the years, and I hear it's the same story I hear all the time. I've only got like 20 minutes to trade. I can't be spending all my time in front of the charts. I need, something simple. I need, something where I could trade off the 4-hour or the daily charts. Although if you're only got 20 minutes, 4 hours out of the question, because you got to check those 2 or 3 times a day. But, they're limited amount of time, limited amount of capital. Want something that's going to work. I think right now, because we are seeing a little bit more volatility in prices, we're seeing a little bit of an increase in the average daily range, which, by the way, she includes in here. Nice little tool to have so you can gauge where you're at in terms of the averages on the days. I think it's this is a very solid trading method, and I think if you follow it, you pick it up and you implement it, and spend the first day reading her material and watching her videos. Really getting a good feel for how this works. It becomes sort of an automatic. You'll just be able to glance at the charts and say, yeah, trade, no trade. And what that means then too is that you can put up 10 or 15 or 20 charts if you want, and be able to spin through your entire collection of tradable charts in just a matter of a few minutes every day, right at 5 o'clock when the markets close. And I think also you can sort of anticipate changes, because if everything is beginning to change color and that another or a final indicator has not quite made the change yet, you can anticipate that happening on the next candle. If you're in the midst of a run, then you're probably not going to get another signal, so you don't have to worry about it. So it does take a little of the pressure off of having to be there absolutely every day to watch, especially if you're only watching maybe 2 or 3 pairs. You might be able to get away with 1 or 2 days a week keeping an eye on this sort of thing. Now, she does, in fact, if you pick up the advanced method, if you've never purchased any of her stuff before, in her advanced method she includes a trade manager, pretty solid trade manager that allows you to pretty much put all of this stuff into the robot and then let the platform do all the work for you. All you do is just check in every once in a while, make sure everything is running according to schedule. Now, there is one thing that she does say in the sales material that I want to bring up and cover briefly, in that she talks about how she loves trading the pound pairs. I love trading the pound pairs. I think the pound pairs generally offer the most volatility, some of the best runs in terms of price moving in one direction. There's about 6 or 8 charts that I have up here. I know you've been staring at the euro-dollar chart the whole time. Sorry about that. We'll get onto that here in just a minute. But most of the pairs in here have some sort of pound relationship to them. Okay. But I want to warn you about something with the pound right now. I mean, I'm sure anybody that's been paying attention knows this already. The Great Britain is going through something called Brexit, which is where they are trying to remove themselves from the European Union. Whether in part or in whole, it seems, I guess, yet to be determined, but they're trying to pull out. What has been happening lately is that every idiot on Twitter with a blue check mark next to their name that makes a comment about Brexit one way or the other has been roiling the markets and causing abrupt reversals in trends. Sometimes it's good, sometimes it's bad. It's one of those things that it could go either way, although the way my luck runs generally runs against whatever I'm trying to do at the moment. So while I agree with her wholeheartedly that trading the pound pairs is probably the ultimate way to achieve consistent profits in Forex, just be very wary right now that until they get this mess sorted out, and supposedly that's going to happen sometime in January or February if they don't stretch it out and don't get extensions, that all the pound pairs are going to be subject to massive price swings and massive reversals. So just tread very carefully. That's all I want to say if you're dealing with the pound right now. I trade the pound yen every morning for a couple of hours, and I got to tell you, for the last few weeks, every trade I place is almost with my fingers over my eyes. I don't want to see what's going on because I'm almost, I've had too many trades that have blown up because of this. Like I said, every idiot that says something on Twitter about Brexit is taken seriously by the market, whether they deserve to be or not, and then everything kind of falls apart. So, anyway, enough looking at the euro dollar, although I will point out that you can see that, let me do one last thing out. You have the arrows, and generally arrows indicate signals, and I think this one is really not any different. But she will tell you in her material that do not wait for the arrow to appear if everything else is solid and telling you to move forward, because the arrows oftentimes are waiting for price to reach a certain price point before they will trigger. And there's no need to wait for that and give up pips if you do not need to. The arrows are a nice reminder, but they're not really all that crucial to the system. So don't get too caught up on the arrows or waiting to see them, because you may end up leaving pips on the table unnecessarily. So we've kind of already gone over this trade. This was your signal when it closed here, so this would have been your sell. A little bit of a reversal here. If you'd followed the dots for a stop loss, you were out. But if you were like me and you waited for the stop is up here somewhere until you see some significant price action, you got all the way down to about 1330. The entrance was about 1500, so there's about a 170 pip move right here. Very nice, very solid. Pound dollar, again, one of the pound pairs. This is what you were sort of warned about here a little bit. You had an entry pretty much. No, I'm sorry, the entry was right here because that was right here. This is your entry right here at 31.34. You got all the way up to the top at 32.56, so 100 and some odd pips. So you could have hit a target right there. Somewhere in here, I think it's right here. The half and half lines, basically at that point, you can consider them to be whatever color you need them to be, which in this case would be red, because you're not really taking the trade really until this candle closes. So then it closed over here about 31. And again, if you followed the dots, actually you're probably in pretty good shape because you don't move your price to here until you're on this candle right here. Okay, so you wait until the next candle forms and then move your stop down here. So really you're probably still in the trade, except all the way down here you got to the bottom of the Donchian channel at 127.60 something, and your entry was at about 131 something. So 400 pips over the course of 1, 2, 3, 4, 5, 6, 7 days. Not too shabby. And pick up another 100 or so, on the move up as well. And also, if you had wanted to, you could have re-entered a couple different times right here, if you want to follow that particular path. Over here, you had basically it was right in here is your signal where you got a sell signal that was about 113.26. Looks like somewhere around here, around 112.15. So a little over 100 pips before you got stopped out. Not too shabby. There never has been a buy signal here. You have your one indicator right here that has remained red the entire time, so you don't really have a buy signal. But you do have a re-entry sell, which is, if I find it right here, you are actually red and below the line. The problem is that you went back up above the line on this one, so you probably took a small loss on that trade. I think your entry would have been about 23. Your exit would have been about 40. So you could have lost 17 pips on that trade. Or, like I said, if you're like me and you've got to stop up here somewhere and you're just going to wait and see what happens, if you had waited and seen what happened, you got all the way down here to the bottom of the Donchian at 11.36. So about 80 pips, 90 pip move. Not too shabby. Here you had a nice solid buy. This is the pound Aussie. You had a nice, and you were above the line. Everything is all systems are go. 83.80. You got all the way up to the line at 87.18. 330 some odd pips in a few days. Not too shabby. Here is basically your sell would be about right here at 84.51, and you're probably, depending on how things went down here with your stop, whether you could have gotten stopped out on this one, depending on how you moved your stop again. But if you hadn't, you're still in the trade at 80. And again, your entry was at 84, so about 400 pips. She mentioned, by the way, pound Aussie, pound CAD, Euro Aussie, Euro CAD. Great to trade this method with. And that's what you're looking at right here. Here we are, Euro Aussie, as a matter of fact. Solid buy signal. Actually, this would have been your candle right here, so you would have bought at the bottom here. That's 61.54 and got all the way to 63.54. So what, 200 pips in 2 days? Not too shabby. Get back over here. This is your original sell signal at 62.04, and you got up to all the way to 60.40. So the odds are good. You probably got stopped out somewhere right around in here, but if not, 160. Eventually, it came back up pretty close to your original entry. So yeah, hard to say on that one how it would have turned out. Again, you kind of have to make decisions on the fly, but only once a day at 5 o'clock, so it's not too difficult. I know that if I'm up 160 pips, my stop is moving into profit somewhere. I'm not going to lose. I'm not going to come out at break even. I'm going to pick up at least 5 or 10 out of it. So that's just personal preference once again. Over here we had essentially this would have been the close on this candle, so your buy would have been right in here around 169.50. It did go all the way back to the top at 172.90. So about 300 pips roughly on the buy trade. Never really in doubt. You did get a sell signal that was over here. Essentially your entry would have been right around 171. Price got all the way down to 167, 400 pips, and is banging around a little bit through here, but really no danger. The stop losses have never really been in danger. You're probably still in this trade, so if you got in up here, you're probably up about 400 pips right now and counting. So really a pretty good setup. I think that's it. That was it for the charts, and I think this is a 25-minute video, so that's probably long enough. So let me just say that, you know, if you're somebody who's just looking to spend a few minutes a day and you don't want anything overly complicated, then I think this is your you know, this is the method right here. I will mention this. I hesitate to do so because videos are forever, and what I'm mentioning is very, very time limited. But today is Sunday, the 28th of October. Tomorrow night, the 29th, there is a coupon code that she gives me that expires tomorrow night. So if you're watching this after, you know, the 30th of October 2018 or later, the coupon code does not work. Sorry, this was a very limited time offer that she made to basically to people on my list and people on my YouTube channels. So if you look at the bottom in the whatever they call that thing, where we type all the information. Anyway, you look underneath the video, you'll see a link and you'll see the coupon code and all the rest of that stuff. If the coupon code's not there, it's because we're after the 30th, and I'm taking it out. I'm not, so you kind of missed out. But anyway, you knock 20% off the price, which is a very decent discount, and you end up with basically a very good system that you can use, I think, to very consistently make pips on just about any pair that you choose. So anyway, I hope you found this video to be informative. I think I'm going to make another one in the next day or so, because I think there's a couple other things I want to cover, but this one's already gone on long enough, and so we'll just wait for the next video to cover the remainder of the topics. But hopefully you found this helpful, and hopefully you'll come back and watch some of my other videos later. So anyway, thanks for watching and sticking it out with me. We'll talk to you soon. Bye-bye.